Want wealth that lasts a lifetime? Well, why not hear it from the man who turned pennies into billions, Warren Buffett? His secrets have built empires, and now they can help you too. In this video, we will reveal Warren Buffett's 5 ultimate secrets to guaranteed long-term wealth. His proven strategies are the only playbook you will need for financial success. So stick with us till the end to learn how Buffett's legendary secrets can be the ticket to your guaranteed long-term wealth. Because knowing these secrets can be your first and most needed step to build wealth that lasts. Number 5. Invest in personal growth. According to Warren Buffett, the best investment you can make is in yourself. Now you might think, what's that got to do with long-term wealth? Well, let me explain. Warren Buffett spends hours reading books, business reports, and newspapers. That gives him the knowledge that he needs. That also plays a role in his commitment to self-improvement, because then he can enhance his decision-making abilities and have a deepened investment knowledge. So when I say that you should invest in personal growth, I'm not talking about shopping sprees and salon treatments. I'm talking about investing your time to improve your knowledge and your decision-making abilities. In today's age, you can access quite literally every financial report and relevant material within seconds. So even if you give 1 hour to yourself and start reading into financial guidebooks, you will see how much that can change you. You will find yourself getting better at making decisions. You will be able to identify opportunities and avoid mistakes because you will know how opportunities work. And once you start working on your personal growth, you will have knowledge about every player in the market. You can then very easily filter out the opportunities you want to avoid. So take a little bit of time and start working on yourself. Number 4. Never lose money. Warren Buffett lives by this golden rule: never lose money. Alright, I know what you might be thinking. Sure, I'll just hit the stop button right now since I can obviously control that. Yes, it may sound like a no-brainer because no investor intends to lose their hard-earned money. But when Warren says never lose money, he actually means don't be frivolous. And that's from experience. Did you know that during the 2008 financial crisis, Buffett lost almost $25 billion? Yes, billions of dollars. So this man knows what he's talking about. Warren's golden rules is basically your ultimate rulebook. As an investor, you should never be flimsy with your capital. You can't just put your money into something and sit back and relax, thinking it's okay even if you lose money. It is not okay. You should have thought about that way before. Warren believes in being informed beforehand, so do your homework and do not gamble away your hard-earned capital. You should never start an investment while being prepared to lose because that mindset sets you up for failure. When you start an investment decision thinking it's okay to lose, you're bound to make careless decisions since you're not passionate about the investment or the results. Never lose money means you should be disciplined and patient and not be impulsive and frivolous, because every dollar should have a purpose. Number 3. Understand what you are investing in. People should never invest in a business that they don't understand. This is one of Warren Buffett's biggest secrets to wealth building. This secret right here has saved Buffett from multiple losses. You might not know that Warren Buffett used to religiously avoid investing in technology companies because he couldn't fully evaluate those companies. And that was it. Because he didn't know how those companies functioned, he didn't think of investing in them. Let's say you work in the tech industry. Since you are in that environment, you might have a deeper understanding of software companies and their innovation cycles. And because you have enough knowledge, you will be able to recognize the companies that have a strong competitive advantage. Of course, you don't necessarily have to invest in the industry that you work for. You can expand your horizons, but you have to have a strong understanding of that industry. You can start by reading annual reports of companies from the industry you are inclined towards. At the 2019 Berkshire Hathaway Annual Shareholders Meeting, Warren Buffett said that you should expand your circle of competence if you can. So on your staircase towards long-term wealth, this is one of the steps you have to take. Throwing your money at an industry you know nothing about is like taking a shot in the dark. You will be clueless and won't know whether you will succeed or fail. This is why you should always do your homework before entering with the big cards. Number 2. The forever mindset. As an investor, you should always believe that time is your greatest ally. Trading without a strategy increases the chances of you making emotional decisions, but the market's volatility can come to bite you in your face. But when you invest in quality companies and keep the holdings for decades, you get to enjoy the benefits of compounding gains, but that requires a whole lot of patience. Warren Buffett's long-term success is largely due to his patience. Everyone loves immediate returns, but for long-term wealth, you need long-term returns. And the real power of compounding is only evident over long periods. Buffett states, "The stock market is a device from transferring money from the impatient to the patient, and you are the patient here." Whenever you think of investing in stocks, you should buy them with the intention of holding them forever, because the growth of those stocks can be much more beneficial. The dividends from these stocks can be reinvested during market downturns, and you can purchase more shares. This way, you can accelerate your wealth accumulation when the market recovers. As an investor, patience is just as important as capital, because without patience, you might fall into tactics like selling in panic. But you should have the patience to view market declines as opportunities, because you are in this game forever. Number 1. Don't follow the crowd. You might think that since Warren Buffett has enough money, he can invest whenever the market has a popular contender. But that's not true. Buffett doesn't participate in hot markets. Yes, the investment icon famously avoids chasing trends or jumping into hot markets, because when others are rushing in at times like these, Warren sits on the sidelines and waits for them to learn a lesson. This secret tactic was witnessed once when the S&P 500 had hit multiple records and Berkshire Hathaway's cash reserves grew to a whopping $128 billion. Investors went crazy over this, but Buffett did not. He chose to sit back and not follow the crowd. And guess what? The next year, Berkshire bought back its own stock, spending $700 million in just the third quarter. The market saw this later, but Warren knew it beforehand. He knew that Berkshire's stock was undervalued, and that's exactly why he chose patience over risk. This one secret is like a mixture of all the others we have discussed until now. Buffett did not invest back when everyone was there because he had enough knowledge, and that's how he predicted what was going to happen. He didn't act on impulse because he didn't want to lose his money, and of course, the forever mindset. He knew that he was in the market for a long time, and so those short-term investments never really tempted him. So, are you ready to unlock the next level of your financial game? Did you find this video helpful? Let us know in the comments below, and make sure to subscribe so that you can stay in the loop and never miss out on any video. Subscribe now. See you in the next video.